what's up, man? What's up? Small Step Finance, Captain D Cuts, Luxembourg, Tay, what is up? Hello, Aquaman, what's up? Hey, Tiffany, hello. We'll wait about maybe like 5 minutes here until people are getting the notifications that I'm live. Hello, hey Tiffany, hello. Wikowski, what's up? Hello, nice to see you here. Okay. Hey, welcome, Kaha. Justin, what's up? Welcome. For the people who don't want to use Instagram, you guys can head over to the YouTube channel as well. You guys should be able to see a lot more of my screen here. So, if you guys want to be able to see that, then go ahead and see the screen through the YouTube channel. Hey, Justin. Nice. Joel, what's up? Quinn. Welcome. Yes, I saw it, Quinn. I did. Thank you for replying. Thank you. Okay. Alright, so let's go ahead and start. So we're going to be talking about moving averages today. Alright. Moving averages can be a bit confusing to a lot of people, but it's actually kind of simple if you just remove the equations, the actual mathematical equations that are used to, divide to make these moving averages. So if I can show you guys this. All right, so the moving averages that I use are called simple moving averages. All right, so they are the averages that aren't that don't move almost equally with price. So simple moving averages tend to lag with price. All right, and they're used by many swing traders. And exponential moving averages, EMAs, are used a lot by day traders. All right, and the main reason why simple moving averages are very popular with swing traders is that it tends to lag with price, meaning it gives them room, right? It gives them room to see how the price will play out once you get either a bullish or bearish signal on these simple moving averages, right? So hopefully everyone can hear me. Did you guys hear everything that I just said right now? Give me a thumbs up, both on Instagram and on YouTube. Hey, what's up, Penguin? What's up, Satch? Okay, perfect. Perfect. Awesome. Yeah, so let's get to the chart here, right? So the simple moving averages that I use, right, are the red line right here, okay, is my 10. And then the light blue line is my 21, okay? And then the dark blue is my 50, and the yellow line is my 200, right? So let me actually write that here for you guys, okay? So 10 is red, 21 is light blue, 50 is dark blue, and then 200 is yellow, okay? So let me have that here on the, okay, so we're gonna have that right there. All right, so let's take that out. So with simple moving averages, all right, they're the best to use, all right, as an indication of either a trend change or just a trend reversal. And here's the simplest kind of way that you guys can use simple moving averages, all right? So you can either get a very bullish indication when you have a shorter moving average crossing above a bigger moving average. So here's what I mean. Okay, hey, what's up, Fig? So, hey, JC Sater, what's up? There's a lot of people here on Instagram and on YouTube. So let me remind you guys here, right? The 10 and the 21, right? 10 and 21. Which one's the shorter and smaller moving average? The red one, right? My 10. So do you guys see how it crossed above, right? The 21 moving average right here? It happened multiple times, right? But when it crossed the moving average on the 21 here, hey, Rain, what's up? Frank, what's up? Koya, what's up, guys? So as the 10 is moving across and above the 21, as it's crossing up above it, that's an indication that there's a bullish signal. And this is one of the most simplest ways and one of the most easiest ways to use the simple moving averages, right? I mean, it's probably the easiest way to tell where the trend is going, right? Where the price is going, and etc. So if you guys are having trouble, identifying specific trends, or if you're looking for a trend reversal, all you need to do is look out for any of these crossovers, especially if you're looking for a bull run, right? A bullish continuation to the upside or a reversal to the upside. All you have to do is look for a smaller moving average crossing above a larger moving average. So in this case, the 10 and the 21, right? Now, in the opposite sense, right, when we're looking for a downward move, a bearish move, it's the complete opposite. It's the vice versa. You're looking for the bigger moving average to go and cross lower of a smaller moving average, right? So, okay. Oh, excuse me. Sorry. I got confused with what I'm saying. So what I meant by vice versa is the bullish to bearish, right? So when you look at the moving averages, right, when you're looking for that bearish trend signal, right, you want the smaller moving average to penetrate the bigger moving average, right? And ultimately, all right, you guys can also see, right, once we have that penetration to the downside of the smaller one to the bigger one, the price tends to follow as well, right? The price tends to move lower, okay? So let me show you guys there we go. So do you guys see how right where we were at here? The 10 and the 21, right? And you see that the price has changed, right? And the price trend here is going to the downside, okay? So let's review that again, right? The simple moving average, right, can be used for two purposes here: for a bullish trend indicator or a bearish trend indicator. All right, hey, what's up, Angel? So when we have a smaller moving average crossing above a bigger moving average, that's a bullish indicator. And when we have a smaller moving average crossing below a larger moving average, that's a bearish indicator, right? So it's the opposite, okay? So that's very, very simple. Now, here is the second most, popular way to use moving averages. You can use moving averages as levels of resistance and support. Now, you might be wondering, how does that work, right? How do moving averages act as support and resistances, right? Well, simply, let's take a look at this trend right here, right? So look at this bullish trend all the way to this trend, okay? So all throughout this entire area, right? Clearly, you guys see that the price is going up, right? I mean, clearly see that the price is going up here, right? If I move all my drawings here. And guess what the 10 and the 21 are doing, right? So let's actually bring back the text here, right? So remember, the 10 SMA is my red one, and then the 21 is my light blue one. All right, and so do you guys clearly see that the 10 and 21 is moving along with the price, although the bigger SMAs tend to be lagging to price. And what I mean by lagging is that they tend to kind of stray a little bit further away from the actual candlestick bars, okay? But the smaller the moving average, the closer they will be to the candlesticks here, to the price candlesticks. Now, as we're moving higher, right, you guys can clearly see that the 10 and 21 are acting as SMAs of support, right? The video keeps on crashing. Frank, is it better now? Everyone can still hear me? Yeah, sure that the video is crashing. if it is, tell me guys. I will try to resolve it here. No? Okay. Well, never mind then. So when we have such support from the moving averages, right, they tend to be very, very good entry points as well. Okay, so you said the video is crashing once in a while, but you're good. Okay, all right. At least you guys can hear me once in a while when it crashes. So do you guys see right here, right? For example, right here, the price has already gone up. It's already trending to the upside, right? It's an upside trend. And then it takes a little tiny breather, right? Where the 10 and 21 are kind of entangled with each other, right? So whenever you see two moving average, or especially two moving average pairs, all right? Let me actually get this out of the way, these candlesticks, right? It usually starts to give you an indication that the price is looking to consolidate after a nice run up or run down. So, I mean, this is clear evidence right here, right? The price is starting to consolidate. And what it did after that is it made a nice bullish pennant, right? It made a nice chart pattern. And then after, right? After the price has been done consolidating and it's starting to break out of the chart pattern again, right? After that consolidation, that brief consolidation phase, the moving average shows us that the 10 is now crossing above the 21 SMA. And what was that again, guys? A bullish indicator, right? And so the price is most likely going to be breaking out of here. And if we come back and get the price back here on the chart, it has, right? All the meanwhile, the moving averages, right, are supporting the price higher, right? Do you see every single time the price is above the moving averages here and it comes back down to retest it, it bounces on top of it, right? Providing some good ample support for the uptrend, right? Every single time, here as well, until eventually it stops because, well, the price tends to be sometimes a little bit too overextended, right? There can be an overextension where the price becomes a little bit too overextended or far away from the rest of the moving averages. And this is where the other two moving averages come in, my other two pairs, the 50 and the 200, right? So let's review that again. So in an uptrend, right? Now remember, whenever I'm speaking about the uptrend, you guys can apply it with the downtrend as well. It's just that everything is flipped, right? Everything is the opposite. So in an uptrend, moving averages, right? The 10 and 21, my shorter term moving averages, right? Obviously the 10 is a lot shorter than the 21, but if I'm generally speaking about these two pairs, there are the shorter moving averages, right? And these shorter moving averages in a uptrend will be providing support to the price, right? As you're going up higher. And this is the reason why I always say the 10 and 21 are my momentum moving averages, because, well, they keep the momentum to the upside, right? They help support the price to continue to move to the upside. Even when they come back down to retest either the 10 or the 21, they bounce, right, in an uptrend, because that's what price tends to do while we're in a uptrend with momentum. So the 10 and 21 proves to be again and again a very, very good support moving average, and also a good entry point and a stop loss, right? Because let's say, for example, right, let's say you got in here. Okay, let's say you got in here, right where my mouse cursor is, right here, right, at the retest of the 10. Right? If you got in at the retest of the 10 here, right? You might want to keep a stop loss, right? Why stop loss, right? If you're looking to play the uptrend, right? Since the price is still going up, right? You expect that the price will go up. But if you want to have a nice stop loss, you most likely want to put a stop loss right at the 21 SMA, right? Because the 10 and 21 are what? They're momentum moving averages, right? They're my momentum pairs. So, if we decide to penetrate below the 21 SMA, right, that means you will have to get out. But when we came back down, we retested it and bounced again. And we came back down, retested it, and came back up again. And then we start to go back up once more, right? So moving averages can be used as entries and stop losses, right? Those are two very important things that you guys need to know about moving averages as well, right? So we talked about the moving average crossovers, right? And how they can also be used as support and resistance. Remember, anything that I say right now in an uptrend can be used in a downtrend as well. So what do I mean by that? In a downtrend, moving averages can be used as resistances as well, right? Just as it is in an uptrend, moving averages can be used as support. Okay, hey, welcome guys, welcome Chris, welcome Alex. All right, so with that, all right, let's talk about my 50 and the 200. So how do you know when the moving averages are telling you that potentially, all right, we're about to reverse to the downside, since we've been talking about the uptrend? So in a downtrend, how do you know? First of all, before we take a look at the 50 and 200 pairs, okay, the price starts to move downward, obviously, right? And instead of bouncing at a 10 and 21, the very first sign that you can see where the price is starting to move downward and there can be a potential reversal to the downside is that the moving average, right? These moving averages start to cross and curl to the downside, right? But before you even see the moving averages starting to curl downwards, okay, you first start to see the price starting to penetrate below the 10 and 21 SMAs here. And usually when they penetrate to the downside, and if you're looking for a reversal to the downside, these candlesticks tend to close below the 10 and 21. So if you take a look, right? So if you guys take a look right here, okay? Just in this specific area, all right? This specific area right here, okay? Right over here. Do you see how in this candlestick, right? We closed below the 10 SMA, right? And then the price starts to react very, very volatile, with a lot of volatility, right? As we just start to move straight down, all right, with no bouncing at all whatsoever here, okay? So, can everyone still hear me by any chance? Hopefully. Yes, I think that's a yes. Thank you. No? Okay, so people on YouTube, give me 1 second here for people on Instagram. Okay. JC Sater, thank you so much. Thank you for confirming. Okay. Did that work for people on Instagram? Maybe? No? Okay, it hasn't. Dang. Well, that's too bad. Okay, so let's try this again. Okay. All right. So, yes, JC Sater, this is a daily chart. You're right. Okay, so let's try this one more time. All right, so for LAC here, right? This is LAC, JC Sater, if you're wondering what the ticker symbol is as well. So, hey, welcome back, guys. Welcome back. Foodie, what's up? What's up? Okay, so as I was saying here, right? You see that the price penetrated below the 10 and 21, right? And eventually, it started penetrating below and staying below the 200, the 21 and the 10, right? And that's where you start to be a little bit, suspicious, right, of whether or not the uptrend is going to continue or not, because we've had multiple days where the price ended below and closed below both the 10 and 21 momentum SMAs, right? So this is our first signal here. So now you're telling yourself, will the uptrend stop here? Because it seems like the 10 and 21, which should have been my support, right, all the time since we've been going up, right? I mean, we already went over this, right? These moving averages, right? These two pairs have been acting as good support the entire time we've been going to the upside. But now we're starting to see some cracks, okay? And so in this crack here, right, where the price has closed multiple times below the 10 and 21, that needs to get you thinking, because that's a very, very good signal and possible indication that the uptrend is over. And guess what? Here's where you get confirmation. So in the same area, in the same area right here. When the price wants to come back and retest the 10 and 21, right, it will always do this. Whenever the price tends to penetrate to the downside in an uptrend of the 10 and 21 SMAs, right, it tends to come back up and bounce up and retest the 10 and 21 here. Did everyone get that? Okay. Oh, it seems like we have some people coming back on the live here. Perfect, perfect. Alright, so like as I was saying, right? Like I was saying here, the candlesticks, right? The only way you get confirmation of that downtrend is when we come back and bounce, retest the 10 and the 21 here, right? These two right here, and we start using it as a level of resistance. Did everyone understand that, right? Do you see how we have now flipped the trend from the upside to the downside, and through the use of these simple moving average pairs, my 10 and 21 moving averages, right? These two pairs, this pair here, the 10 and the 21, right? And so we flipped to the downside, right? And as we're starting to use the 10 and 21 as a level of resistance, guess what the 10 and 21 did? Right, we talked about this the very first time. The 10 crossed below the 21. The smaller moving average crossed below the larger moving average, right? Creating a bearish signal. And so the price is now starting to go down, right? The price is now using, right now, the 10 and 21 is now being used, right, as a level of resistance instead of support. Hey, Nicole, what's up? Andres, what's up? So let's review that one more time, right? In an uptrend, the 10 and 21 momentum SMAs, they keep the momentum to the upside and they use it as support, which should also provide ample areas for entry and for a stop loss, right? And in an uptrend, the smaller moving average crosses above the bigger moving average, right? So that means the 10 here will have to cross above the 21 here in order to create a bullish signal to the upside. Does everyone understand that, right? I know we've been having technical issues here today, but hopefully everyone can and still understand what I'm saying. And now, let's take a look at a reversal, right? Where we're now going back to the downside, right? So, like I said before, right? Let's review it one more time. How do we know that a potential reversal of this uptrend, right, or the end of an uptrend is about to come? First, the price, right? The candlesticks start to close below the 10 and the 21 SMAs, my simple moving averages, multiple times, instead of bouncing on top of it like we've been seeing this entire time when we've been going to the upside, whether it be on a 10 or the 21. It doesn't matter, as long as we're retesting it and bouncing and continuing up to the upside, right? Instead of doing that, right, the price penetrates below the 10 and the 21 and stays below for a couple of days, right? So instead of bouncing, we just start to go right below and close below it multiple times. So right here, we close at least 1, 2, 3, 4, 5 days, right? Okay, below the 10 and 21 momentum moving averages. And then how do you get confirmation that the trend has officially flipped from the uptrend to a downtrend? How do you get the confirmation, guys? We start to use the 10 and 21 as levels of resistance, right? Do you guys see how everything flipped? Right? So, like I said before initially, when the live first started here, I said the moving averages will be used as level of support when we're in an uptrend. But when we're in a downtrend, the moving averages will be used as a level of resistance. So this is where we get our first confirmation here that the price has flipped officially to the downside. Because, well, every single time we retested and came back up above the 10 and 21, we immediately reject and we start closing below the 10 and 21 once again, after initially breaking and penetrating below the 10 and 21. So this is giving us confirmation that the trend to the upside is officially over. And guess what happened after that, right? The price continues to fall and fall and fall and stays below the 10 and 21, right? And as a last final confirmation that the trend is to the downside, right? And the trend has now flipped from the upside to the downside. We have our smaller moving average crossing below the bigger moving average, right? The 10 has now crossed below the 21 moving average. Okay? I'm going to talk really slow for you all so you guys completely and coherently hear me, so that this is going through your heads. Right? So this is our final confirmation that the price is going to the downside, right? And you guys see, after some time, the price continues to go to the downside. Now, let me talk about the usages of the bigger pair here, the 50 and the 200, and how you can tell when the price is about to end its uptrend. So now we talked about the momentum estimates, right? The 10 and 21, how they can help you see and observe whether or not an uptrend is officially done, right? And eventually we'll have a reversal to the downside, right? So that's where we first talked about the 10 and 21. Now, for the 50 and the 200, the bigger estimates, how do you know when the 50 and 200 is telling you, okay, when the 50 and 200 is telling you that the uptrend is over? Okay, so let's go ahead and take out my drawings here again. All right, so do you guys see right here? Let's go back right to this area where we started, right? And now let's focus on the 50 and the 200. Just the 50 and the 200. Okay? Do you guys see how on the 50 and 200 here, right? We had a nice cross of the 50 above the 200, right? And what does that mean, guys? A bullish indicator, right? Because a smaller moving average has crossed above a bigger moving average, the 50 and the 200. So if you guys are just coming in here, my 50 is my dark blue line here, and then my 200 is my yellow line right here. Okay, so frozen. I do have poor connection here for some reason. It's very weird. YouTube, everything is completely fine, but Instagram is having trouble here. I'm getting these technical difficulties right after I re-downloaded and then I also updated Instagram as well. So hopefully these problems go away soon. Hopefully, but nonetheless, I will keep on going here for people on YouTube. But guys, if you guys are frustrated and you guys can hear me on Instagram, go ahead and head over to my YouTube, and you guys should subscribe so that you guys can also get notifications on YouTube as well when I am live. All right. But if you guys want to see a bigger and better view on my screen, head over to YouTube right now. All right. The link is in my bio. All you have to do is click on the YouTube icon that you see when you click the link in my bio there. Joe, I can hear you. Yes, perfect. So, like I said before, hey Lemur, what's up? Right? When the 50 and the 200 crosses over, right? When the 50 crosses above the 200 here, that is a bullish indication. Why? Because the smaller moving average has crossed above the bigger moving average. Okay? I hope that makes sense. Right? So, Joel, you switched over to YouTube. Awesome. You said much better. Okay. So people, you guys should switch over to YouTube if you guys are having problems on Instagram. And if you guys aren't subscribed to the YouTube channel yet, make sure you guys are subscribed. So with this moving average right here, right? The way that you guys can tell using the bigger moving averages like the 50 and 200 that the price is going to reverse to the downside, right? From an uptrend to a downtrend, right? This usually tends to happen when the price is overextended away from the 50 and the 200, right? So here's what I mean, all right? So let's actually take this away. Yeah, okay, perfect. So do you guys see how far away the price has to become, right? From the 50 and the 200? Do you guys see when the price was very, very close and entangled with the 50 and 200? And so eventually when we have a bullish indicator or when we just have a price breakout, we tend to move away from the 50 and 200. That's great because when we move away in an uptrend, that means, well, the price is still breaking out to the upside, right? That's great news when the price is moving away from the 50 and 200, the bigger simple moving averages, right? The 50 and 200. And we get confirmation from the 50 and 200 when the 50 crosses above the 200, giving us a bullish signal to the upside, right? For the long term, right? Because they are the 50 and the 200 day, right? So as we're moving away from the 50 and 200, as we're continuously moving to the upside, eventually there's going to be a point in time where the price is too overextended. There's way too overextension to the rest of the simple moving averages here, my 50 and 200, right? And you see how far away we become. So at some point, the moving averages, right, will kind of act like a magnet. Right, think of it this way. The 50 and the 200 are going to act like a magnet. And eventually, the magnet is going to get stronger and stronger as the price is trying to move away from the 50 and 200, right? Because that's what we've been doing as we've been moving to the upside, right? So if you think the 50 and 200 is a magnet, right, at some point, the price is eventually going to be weakened by the magnetic pull of this 50 and 200. And guess what happens when we're very overextended from the 50 and 200? Right? We start coming back, all right, all the way back down and retesting the 200 and the 50. Okay? So, do you guys see how we came all the way back down and retested the 50 and 200? And eventually, we start to use the 50 and the 200 as levels of support and resistance. Okay, so that's probably one of the most simplest ways that you guys can use moving averages. So, like I said before, with the 10 and 21, right? Everything that I just told you guys on the 50 and 200 for an uptrend, you guys can also use it in a downtrend, right? So simply speaking, every single moving average that you guys use can be used as a support in an uptrend and as a resistance in a downtrend, right? Hey, what's up guys? What's up? Okay, and Lemur, I'll get to your question at the end of this lesson here. All right, so once again, right? Do you guys see, right? Let's take a look at all the SMAs here now, right? All my 4 SMAs that I used, the 10, 21, 50, and 200. You guys should be able to see some type of pattern here, right? Whether it be to the downside or to the upside. Do you guys see at some point, right, when we're going to the upside here, the moving averages kind of explode to the upside, and eventually they come back down, and what do? They start coiling with each other, right? The 4 SMAs that I'm using here start to really just coil with each other here, right? Coil with each other right here as well, right? And that right here as well. And every single time there's this coiling activity between all the SMAs here, or some SMAs, right? It usually tends to be the 10, 21, and the 50, but it doesn't really matter. All you have to see is that the major SMAs are all coiling with each other. There tends to be a very impulsive move to either to the downside or to the upside. So this concept can be applied to the downtrend and to the uptrend. Does that make sense, guys? Right? So when this coiling of SMAs tend to happen, right? It's when they get extremely tight together, right? It seems like they're very, very coiled up tightly, and it seems like they're ready to explode and unwind. You get a very explosive move. And obviously in this name, we're having a very, very big movement to the upside, right? We've been going up and up and up and up and up since March 2020. Okay, so as we're going to the upside here, right? At some point, these moving averages are going to start showing a big downtrend here at some point. Why do I say that? Well, because the price is starting to get a little bit overextended from the major, bigger moving average pairs like the 50 and the 200, right? So eventually, in the longer time frame, and especially when you're looking at the longer time frames, you guys want to focus on the 50 and the 200 pairs. And if you're looking for the shorter time frame, right, in the small time frame, you want to be looking and focusing on the 10 and the 21 SMAs. Does that make sense, guys? Right? Hey, Kevin, what's up? Dre, what's up? Randy, what's up? Crew, this is 1 day time frame, but the time frame does not matter right now, right? We're focusing on the moving averages, right? If you guys saw the live, you guys should be able to see the title, right? So I'm not going to be answering any questions just yet on anything technical. Technical wise, I'm only focusing on the moving averages here, okay? So my apologies for guys if you guys don't see me answering your questions on what time frame or what ticker or what price or whatever, okay? We're focusing on the moving averages. So that is a very general, okay, summary to simple moving averages and basically overall moving averages that you guys can use, okay? Now, moving averages can be very, very simple to use or very hard to use. And here's the reason why, okay? Because most moving averages on any charting platform, on TradingView, on TrendSpider, on whatever it is, right? That you guys can use, like Webull or whatever, okay? They are lagging to price. And what I mean by that, okay? I'm not saying that the moving averages are like technical indicators, where technical indicators are actually lagging indicators where they are showing past information to give you a clue to the future, right? But moving averages are using actual real-time data, right? They're using real-time data, real-time closed prices, and they form an average. And the average value is what you see on these squiggly moving averages, right? So all these lines here, they're the average price, okay, of all the closed real-time prices of the candlesticks. So, for example, on the 10-day moving average, right, the 10 simple moving average here is using the average 10 closed prices, right, 10 closed prices here, okay, and it's forming an average number which creates this 10 moving average here, right, this red line. And the same goes for the 21 moving average. And the same one goes for the 50 moving average. And the same one goes for the 200. And do you see why, right? This is the specific reason why that the 10 and the 21 is used as a shorter term perspective on a trend, while the 50 and the 200 are used as the larger perspective and larger time frame, right? And you want to be looking at the 50 and 200 for investing purposes, for example. And this is also the reason why I use the 10 and 21 momentum moving averages as for my swings, for example, for my swing trades, right? My swing momentum trades. Okay, does that make sense, guys? Give me a thumbs up. Hey, Saji, what's up? Okay, so I do get a lot of questions on what type of moving average that I use and how do I use them. So hopefully this live is answering your guys' questions. All right. Hey, what's up, Mithan? Okay, so make sure you guys are listening closely to this. Now, and Joel, you said learning so much. Can't wait for the one-on-one mentorship. Hey, awesome. Yeah. So if you guys don't know, guys, Joel is a current member of the CFO Swinger Watch and in the CFO Discord, and he recently upgraded. Okay, he upgraded to the newer membership where he actually gets monthly memberships, one-on-one monthly memberships. All right, for 1 hour and 30 minutes. Okay. All for the price of $120 per month. And guess what? For all of that, you guys can get, well, now you can get, you guys will get the CFO Swinger Watch newsletter on Sunday, every single week, okay? And in that newsletter, it prepares you for the entire week, where I do all the fundamental and technical analysis, right? And then accompanied with that, you guys also get access to the CFO Discord, okay? But since you guys are on the live right now, okay, you guys will get a discount. So if you guys want to join right now, if you guys want to join, if you guys want to have the one-on-one mentorship sessions with me every single month, and if you want the newsletter and get access to the Discord community, right, use the code 5OFF. Okay, so code is 5OFF. Okay. All right, so I'm going to pin that right here for Instagram. And for YouTube, okay, use the code 5OFF to join. All right, this is for your first month. You guys won't regret joining. All right, so that is what I'm going to offer you guys. Make sure you guys, if you guys have any questions, please DM me or email me or message me, whatever it is. I will answer you guys back. I do get a lot of messages, so please be patient with me. I apologize if I don't see a message. Please send it again so that you guys can move your message back up on my messaging list, my DM list. Okay, but like I said before, if you guys want to join the CFO Swinger Watch, which contains all the fundamental and technical analysis that you need and to be prepared for the entire new trading week, and sometimes it spills onto the next week as well. Okay, join now, because you will also get access to the CFO Discord, and you'll get one-on-one monthly mentorships from me. Okay, you guys will get sessions with me, one-on-one mentorship sessions every single month for 1 hour and 30 minutes. Okay, so make sure you guys join the code 5OFF. Kevin, hey, what's up? Thoughts on SMA versus EMA? Oh, well, since my first live was deleted because, well, I had technical problems, I did talk about SMA and EMA. So, EMAs, right? Here's the number one reason why I don't use EMAs, right? The EMAs are way too close in proximity to the price. And what I mean by that is that, well, simply, what you guys see here, okay, on the SMAs here, right? The EMAs are a lot closer to each other, right? They're a lot closer. And they have a lot of sensitivity to the price, which means that there's going to be a lot more volatility within the SMAs itself, right? With every single price movement, the EMAs will also start moving rapidly as well. And as a swing trader, I do not like to see that because, remember, a swing trader likes to look at the longer term perspective, right? It doesn't matter if it's a day or 2 days, 3 days, 4, it doesn't matter, right? But whatever the date or time frame you might be looking for, okay? EMAs tend to only work out for day traders because of this number one fact here, okay? Because of the fact that EMAs tend to move very, very quickly in the intraday time frames. And guess what? What type of traders use the intraday time frames? Day traders, right? And so they tend to use EMAs where the exponential moving averages are showing them the average value on whatever EMAs are you looking at, right? The 9 EMA, the 10 EMA, the 20 EMA, whatever it might be, right? Those EMAs are quickly, all right, showing you the average price, okay? So, momentum, yeah, sure. So generally speaking, right, EMAs tend to be a lot more volatile. Okay, they can go really, really quickly, right? They show the values very, very quickly, and they move along with the price very quickly as well, right? While the simple moving average, they're not lagging per se, okay, but they tend to show, and they're a little bit further away from the candlesticks, right? Yeah, so Kevin, yes. So simply put, SMA for swings, EMA for day traders, right? And the number one thing that I actually like about simple moving averages is that the 10, 21, 50, and 200, they all kind of act individually, even though it's kind of not, right? So what I mean by that is that, these moving averages, they all look different, right? But for EMAs, if you take a look at the EMAs on a daily time frame, they're all just straight moving averages, right? They all, for example, in an uptrend, right? They're all just moving like this. Here, let me give you an example, right? Oh, all my drawing just came back. Let's actually go back to a chart that doesn't have enough. Okay, so in an uptrend like this, right? The EMAs all look like this, right? There is no individual characteristic, right? I mean, yeah, the price is going to the upside, but you have multiple EMAs showing the same exact thing. So what's the point in that, right? Especially if you're looking at the broader time frames, the larger time frames. And that's the reason why EMAs are more geared towards day traders, because EMAs show more value in the intraday time frames, like the 5-minute, 3-minute, 15-minute, 1-minute, right, and etc. Okay, hopefully that makes sense. Okay, so that's kind of my take on EMAs and SMAs. Obviously, I don't like EMAs because, well, I'm a swing momentum trader, momentum swing trader, right? I tend to look at the simple moving averages as my points of entry, my points of stop losses, sometimes my points of exits, my profit targets, and etc. Right? So if you guys are kind of struggling where you don't know whether to use EMAs or SMAs, you first need to figure out if you're a day trader or a swing trader. And how do you figure that out? Well, you figure that out by knowing your trading personality. Yes, you guys do have trading personalities that are unique to each individual person and trader. Okay, so I can't give you guys what to use, because you guys can be a swing trader, you guys can be a day trader, you guys can be a scalper, you guys can be whatever type of trader there might be out there, right? Investor, etc. I wouldn't know, because you guys are the ones that have the unique personalities and perspectives on trading. Okay, and specifically for me, my unique personality in trading is using simple moving averages, because I am more aligned with being a swing momentum trader, right? Or momentum swing trader, it doesn't really matter. It's just semantics there at that point. But like I said, that's kind of the basics on simple moving averages and moving averages overall, generally. And everything I just spoke about in an uptrend, all of that can be applied in a downtrend as well. And for people who have just joined on Instagram, okay, you guys won't be able to see the entire live, because I had to stop the Instagram live for a few seconds, or like a minute or so, because my sound cut off. But you guys can see the whole entire lesson on YouTube. All right, it will be posted. All right, I'm not gonna keep it private, so you guys can go ahead and head over to my YouTube after this live is finished, and make sure you guys are subscribed so you guys can catch future lives. And also, if you guys want to see a better version of this live and a better view of my screen and what I'm looking at, head over to my YouTube, subscribe, like, whatever you guys want to do. But make sure you guys are subscribed so that you guys are able to get your notifications on your emails or on a YouTube app, whatever it may be, when I am live. Okay, so that is it for today, guys, on moving averages. Okay, hopefully that was a nice long lesson for you all. I've been live for about an hour now, okay, for moving averages. So Lemur, I don't know if you're still here, but let me go over GDX for you. So GDX, it hasn't broken any type of trend here yet. It's just consolidating. I expected that this week. I even told my CFO Swing Watch members in the CFO Discord. So if any of my CFA Swing Watch members are surprised that GDX came back down, well, that's kind of your fault for not looking, right? I told you guys over the weekend, right? Most likely this week we might have a real possibility that we can have a nice consolidation week. And guess what? We already started, right? So all we need to do is not break this ascending support trend line here on GDX. And if you're able to stay above this ascending support trend line, and eventually, if you're able to consolidate below 39.50 and around $40, we should see another big movement to the upside. Okay, but it all also depends on gold as well and how gold is moving. All right, so right now gold is consolidating as well. So commodities tend to consolidate for months at a time. So you have to be very, very patient for commodities. But when they do break out, they tend to have very, very large runs. Okay, very, very big, large runs. Okay, as you guys can see on steel, what else? Oil, natural gas, and etc. Right? So, hey, Ricardo, what's up? So, let's do one more review here, right? So, for the moving averages right here, okay, so I use my 10, 21, 50, and the 200, right? Do you guys see how after coiling with each other like this for long periods of time, right, for months on end, we tend to have a big bullish breakout, right? And the only reason why I'm saying bullish is that, well, we're looking at a bigger, longer term uptrend. And how do we know that? Well, because the price is staying above the 200 SMA. So if I bring back the candlesticks back here, right, we're staying above the 200 SMA. Okay, every single time we retest it, we bounce on top of it and then we explode back up. Right, so like I said before, right, we already went over the significances of the 50 and the 200 pair, and the significances of the 10 and the 21 pairs, right? And personally for me, I use the 10 and 21 as my momentum SMAs, and the 50 and 200 as the broader, larger trend indicators and support and resistances for whatever trend that I'm looking at. Okay, so hopefully that was a very, very good insight into the simple moving averages, or generally the moving averages overall. If you guys are wanting to learn more on the moving averages, join the CFA Swing Watch, join the CFA Discord, and get that one-on-one monthly mentorships from me for an hour and 30 minutes, right? All that, you guys can get all three of that just for $120 per month, right? 120 per month, right? And you guys will make that back every single month. You guys might even make that back in 1 week. Okay? So if you guys are, just on the sidelines because you don't think you guys can make it, you can. You really can. I can 1000% guarantee. I can say that with confidence because, well, the results are there. If you guys are skeptical, take a look at my highlights, my story highlights on my Instagram page. Take a look at the reviews, take a look at the profits, right? You guys will make it back. And also, if you guys want to join by tonight, use the code 5OFF to join, right? You guys will get access to this week's CFA Swing Watch newsletter. Okay, you guys will also get access to the CFA Discord, and also you will also be scheduling your one-on-one mentorship session for this month right away. Okay, so you have all three things right there. Okay, right? You guys get 3 for the price of 1, right? And also you get a discount for the first month, 5 off, right? So if you guys want to take action on that, that's fine. I'm not going to force you guys, right? But it's there for you to take action on. Okay. All right. So that is it for tonight. If you guys want to see the whole entire live and whole entire session that I did today, go ahead and take a look at my YouTube. All right. I will be posting the live on YouTube, the entire live. All right. I'll also be posting the second half of this live on Instagram. But obviously the first half is gone because it had to be deleted. But if you guys still want to check out the rest or the half of this live here, this session, I will be posting it on Instagram as well. Okay. All right. have a great rest of your night. I will see you guys hopefully tomorrow. Okay, if everything goes right with all these technical issues. But yeah, I'll see you guys tomorrow. Join me tomorrow at the same time, right? 7:30 p.m. Pacific Standard Time or 10:30 p.m. Eastern Standard Time. Hopefully, you guys can join by tonight by using the discount code right there that's pinned on the Instagram Live. And for people on YouTube, the code is 5 off. Okay, 5 off. Right? 5, the number 5, and OFF. Okay, have a great rest of your night. Good luck trading tomorrow, and for the rest of the week, I'll see you guys Wednesday tomorrow at the same time. Thank you everyone for joining. Thank you guys. Thank you all for joining.